we got ourselves a very interesting week ahead of ourselves, not just from a technical standpoint, but also from a economic calendar standpoint. We also have some pretty interesting earnings on the board as earnings season starts to kick into a higher gear this week, and then next week it gets even more crazy. So let's kind of jump into things. If you have any questions, feel free to ask. If you have any ticker requests, feel free to throw them out. We'll definitely go over them. All right. Right now I'm looking at the S&P futures just to kind of make a note here before things get started. Futures, yeah, we're currently down for the time being. Futures have been kind of struggling here. As you can see, we've broken this 58.66 mark, and we're steadily just kind of moving down. So overall weakness continues, and we'll kind of get into that. But, you know, one thing that we'll see here is, yeah, look at the weekly charts. This is on your far left side here. This is the main inflection point that I'm going to be looking at this week, and that is the weekly 21 EMA. We have finally reached our weekly mean reversion as things have pulled back. So without further ado, let's just kind of step into it. Let's take a look at the earnings calendar for this week. Financial names are on watch this week, starting off with JP Morgan, Citi, BlackRock, Wells Fargo, Goldman, and BNY. So that starts us off on Wednesday, and then Thursday, probably the most interesting one to me is definitely going to be TSM and UNH. Of course, you got more bank earnings from Bank of America, Morgan Stanley, U.S. Bancorp, PNC, etc. And then Friday, you got Schlumberger, Regions, Truist. So yeah, financials tend to start things off. So we'll be keeping a good close eye on some of these financial names. And speaking of financial names, we'll just go ahead and show this here. I'm looking at the XLF here, left-hand side weekly. You can see that we have come to that weekly 21 EMA. We're still in a neutral bull spot, but when you pull things up to the daily time frame and lower, you'll see that there is definitely some damage being done as we have broken out of this Darvis box between 49 and a quarter and 47.60. And you got a mid-bear score going against the neutral bull. And then when you go down even further, you got this hourly max bear minus 50, bearish MACD thrust to the downside. So yeah, you have a longer term bullish trend, but there's definitely some weakness to be making note of. And we're pretty much going to be seeing this pretty much across the board. So it's more like if you're a long-term trader, you still favor the weekly bias, but you need to wait for the daily timeframes to have some sort of pullback and aligning things back up to the upside. So yeah, if you're a long-term trader, you know, maybe this is the spot where we need to be patient and, you know, see where things can hold steady and possibly reverse. So and you know, like I said, we'll see that more clearly as we move ahead. Moving on to the economic calendar, yeah, it's just one of those things. We got our first dose of inflation data with the core PPI and PPI coming in on Tuesday, followed by the CPI on Wednesday. Key things to note here on the inflation data, we'll see that the PPI is looking to hold steady at 0.4%, whereas the CPI year over year, we're looking to have 2.9%, where the prior reading was 2.7%. So a slight uptick is expected as far as the inflation goes. And then we also have the beige book. If you're not familiar with the beige book, I would encourage you to read it. It is kind of dry. It's very bland reading, but it's They released the Beige Book 8 times out of the year, and this report gathers anecdotal information on current economic conditions across the 12 regional Federal Reserve banks. So if you like dry reading and economic data, check out the Beige Book. It gives you a little bit more insight as to how the districts are holding up. Thursday, we start to get into some of the retail sales and our usual unemployment claims. Nothing too crazy across that. We got a lot of jobs report last week, which we saw come in pretty good. Unemployment rate downtick to 4.1% last week, and the non-farm employment change had a big uptick, 256,000 versus 164,000. So that was a big number last week. So we'll see if that unemployment claims, if that continues to hold steady or what. And then we just kind of finish off the week with building permits and housing starts. But all eyes are going to be on the inflationary data on Tuesday and Wednesday. Like I said, we're only in, market is only pricing in about 2 rate cuts for the year 2025. So we'll see how things continue to shape up as far as that goes. And then, of course, we got the financial earnings starting to gear up. So with that being said, let's jump in to the SPY, the SPY. I know we briefly talked about the S&P futures there. Same case here as far as the SPY goes. We have come back to the weekly 21 on a neutral bull score. But if we look here at the daily, we'll see that we have a mid-bear and we've lost our little bit of battleground here, starting to fill this gap now towards 576 3/4. At this point, I don't see why we don't fill it at this point, especially with the broad weakness going on right now with the S&P futures. But as it sits, we have mid bear and strong bear on the hourly time frame with a daily low compression squeeze. And as you can see, that momentum there on the TTM squeeze indicator is, bright red. So we'll see if that plays out to the downside. We are a little extended from the daily 21 EMA, so if the market bulls do happen to get some really good positive inflationary data, we could see an aggressive mean reversion. So I definitely want to keep that in mind. Shorts, time and time again, have been caught with their britches down at their ankles. And, I'm guilty of it too, but, it is what it is. So if the market does want to turn itself around, what I'm going to want to be paying attention to is the 30-minute chart here, which is at a max bear. I'm going to want to see the 30-minute at least catch some sort of bid here, and I'll zoom in here so you can see it. What I'm going to want to see here is at least the 30-minute to change gears. Maybe we can fill this gap up to 587. But step one is definitely going to retake the 30-minute 200, which sits at around 592.5. So that's going to be where my line in the sand is for bulls are going to have, or really for bears to kind of hold on to. If bulls manage to get above this and hold, you see how we kind of came up to it here, rejected and came back down. We came back up to it, had a little bit of head fake, and this was my concern when we made this move too, is that when we broke out, we didn't quite come back in and check in on mom, and we kind of broke down. So that was a failed attempt by the bulls, and the downtrend continues. So step one is going to at least come back to the to the 30-minute 200 at 592. Maybe have a little bit of this move going on, come back, maybe pull back off the 200 and then go. So that is going to be my game plan. If the bulls can get back up to here, pull back, and then go, I think that will switch the gears from max bear to a more neutral standpoint, and then we can reevaluate from there to see if bulls have some sort of steam to push things back on ahead. But until that happens, it's the bears market to lose. So bears have a lot of control right now, especially on these lower time frames. And like I said earlier, if you are a long-term position trader, you could probably argue that you can still favor the longer time frames because the weekly 21 EMA has not failed, but you have to wait for some of these smaller time frames to become more aligned with the overall bullish structure of the weekly time frame. So you want to look for a bottom, and you want to see that hourly, that 30-minute to turn bullish, since that weekly time frame is in a more neutral position, and then that will give you a more lower risk entry back into the direction of the higher time frame. But because things are so negatively positioned here, bears continue to have the benefit of the doubt. So there's that. Let's move on to the Qs, and really we'd probably end it right there because it's pretty much going to be the same thing across the board here. Qs, same thing, weekly, still solid weekly uptrend. Really the 500 level is going to be the line in the sand here for QQQ bulls. That is where the weekly 21 resides. It's a nice whole number. Great. You're in a neutral position on the daily 30-minute. As you can see, you're also in a max bear situation. We do have a daily squeeze that I'm keeping my eye on. If this continues to falter here, then 500 seems like a reasonable choice to hit that weekly 21, and we'll kind of go from there if things continue to fall. Now, we can see that the daily 200 is down here at 475. It's been a while since we've retested that, since August, really. And if you look here on the weekly time frame, all right, so here's your daily retest of the daily 200 back in August. And on the weekly chart, that would put you back to the weekly 50. And we held pretty well there on that pretty nasty pullback. So if push comes to shove, if the weekly 21 doesn't hold, then look for a move down to about 480. So that's another 20 points on the QQQ. I appreciate you, Pacific. Have a great dinner, my friend. All right, so there's the Qs. Let's go to the small caps. Small caps a little bit more yucky here. Mid bear on the daily. We know that small caps are going to have a tougher time, especially with the higher rates for longer motif from the Fed. IWM, last week they lost this 219 level, which we marked last week, and look what it did. It came all the way back down to the daily 200. So that's my line in the sand now here for the IWM. If the IWM loses about that 215 mark or the daily 200, then I do want to look for a push down to the weekly 200, which resides at about the 200 level. And same thing, you're going to want to see some of these smaller time frames, especially the hourly and the 30-minute, to switch gears before even thinking about becoming more bullish in a bullish positioning. And I kind of mentioned this on Friday's video. Now's not the time to be sizing heavy. We want to see how price reacts to some of these weekly levels, such as the weekly 21 and the mean reversion. We also got a bunch of economic data at play here this week. Now's not a time to be, putting your chips on the table. Now's probably the time to ease back a little bit, make sure you have fodder for the fire, and be ready in case things do take a shift, or have stops in mind on some of your longer term positions that you need to have stops on or take profit points. That way, any positions that you are solid on, you don't want to give anything back. We've had a fantastic run. Just, maybe just be aware of what's going on, situational awareness, play defense if you need to, and so forth. Run the wheel if you have hundreds of shares, etc. Let's go to the Dow. Dow, as we can see, lost that 421 3/4 level. 200 looks like it's in play here. You lost the weekly 21, whereas the other indices have not as of yet. The Dow and the IWM seem to be leading the way as of right now. And just to kind of show you how things are really going underneath the surface, this is the RSP. The RSP is your equal weighted ETF. Ford weighs the same as Apple. General Motors weighs the same as Tesla, kind of thing. RSP right here at the daily 200. Mid caps pretty much looks like, you know, the Dow and the IWM right here at let's see, needs to hold 562. Otherwise, yeah, daily 200 is right there, and you got the weekly 50 right at about the 555 level. So mid caps also showing weakness across the board, but nothing screams crazy weakness like the number of stocks within the S&Ps that are trading above their 50 simple moving average. This is the SPX A50R. This tells you how many stocks are above their 50%. It gives you a decimal point. You just multiply that by 100, and that's your percentage. So in this case, the amount of stocks within the S&P 100 that are above their 50 simple moving average is about 16%, about 16, 17%. Yikes. Now, we can also look at the 200, change that 50 to a 200, and we'll see that we're sitting at about 49%. 49% of the stocks within the S&P 500 are above their 200 moving average. So, yeah, not the greatest stat there. We can see that the dollar continues to rise as well. Strength above 107 as long as the dollar continues to move higher. That affects the carryover trade, etc. And strong dollar equals, you know, not so good news for equities. So yeah, there's that. And then we also have, you know, we could look at China as well. China, you know, despite their strong efforts to pump up their stock market, it's just not enough. It's never enough. So China names continue to show weakness. I'm watching PDD. If PDD breaks below 94 and a quarter off this low compression squeeze, I'm looking for a move all the way back down here to the lows, which I thought I had a level drawn out, but I don't. So that would take us back down to 88 and a penny. So I like the look of that as far as that goes. You could look at names like Baba. Baba had a really gross day on Friday. You just got to be careful with some of these Chinese names. Actually, you got to be careful with all of them because they tend to gap up and down depending. It's kind of nasty and a little bit trickier to do TA on, but Baba losing the daily 200 on Friday. Yeah, why not take this down to the 70s at this point, maybe even lower. So there's that. But yeah, semiconductors, you know, they kind of gave me some hope last week that we were going to have this nice daily squeeze push us up to the upside and above this 262 mark and back up to the 280s. But looks like she has had other things on her mind, as you know, we had the NVIDIA CES event and then down we go. And then you also have NVIDIA CEO Jensen saying that quantum computing is like 15, 30 years away from, you know, being something. And that also had a negative impact across the board. So, yeah, a little bit of a disappointment, not gonna lie. We're still in this daily squeeze, although this mid-compression squeeze has now shifted to a low compression squeeze. And we'll see if the daily 200 continues to hold as dynamic support. It is kind of a mess right here, which we're back in. We had that gap in. Now it's just back to where the scene of the crime began. So if the semiconductors can all wake up and, you know, get us going back above 262, great. If we start to lose 240, then yeah, we'll play the downside. We'll definitely play the downside. One of my favorites to play the downside is AMD. Unfortunately, I missed the boat to re-up on it. You know, I played it to the downside a few weeks ago, and I was looking to replay it again. I didn't catch it here because I figured the semiconductors altogether were about to have some kind of overshoot move, and then I would have to get it somewhere up here closer to the daily 200. Yeah, nope, that was not the case. AMD completely reversed. So I'm going to have to be patient again to see if I get a good clean setup closer to the 21 EMA. We're still in a daily squeeze, so, you know, things could get a nice little bounce, and then we can try again. So I'm going to be patient to see if I can get a good entry here on AMD. Broadcom still looks pretty good, holding the daily 21. So there is some things out there that do have good setups. And that's one of those things too. You have good setups out there like Broadcom, like Roblox and Hood and Net. You have all these names that look pretty good. But we come back to the point that the overall market itself is blowing wind in our face. So it's harder for these A plus setups to go because we have a headwind there. There's nothing that's pushing us forward. So we have some tough roads ahead until the direction of the wind changes, and we can finally get off that island like Castaway. So there's that. And then if we look at the sectors themselves, we can start to look at these individual sectors now that we have a greater understanding of where things are as far as the broader market goes. We can take a look at these individual sectors and then look at individual names itself. XLB, strong bear across the board. Nothing that great. I would be looking to short this. So that's that. Communication sector, which holds Google, Meta even, which I'm still holding bull call debit spreads on that, and we'll get to that in a minute. The communication sector looks a little yucky as well, as it has lost the daily 50, and it is also coming to the weekly 21 EMA right there at the 94 mark. Squeeze, the momentum has definitely, been kind of yucky here as well. I would ideally like to see the communication sector get back above the daily 21 EMA, which sits at about the 98. So if we get a nice little reversal here and we get a good close, something like that, yeah, that would be phenomenal for the communication sector and the overall market, because there is some good leadership names within the communication sector. But as it sits, the daily sits at a neutral compared to some of those bigger names, compared to some of those other sectors that are in mid-bear. Energy is very interesting, if you ask me. You got a neutral positioning. This chart is messy. It's not something I probably wouldn't touch, XLE. I'd probably look at individual names. The one thing that does intrigue me, though, is this hourly chart here. We have here I can highlight this, expand this a little bit more. This hourly chart intrigues me the most because you do have this squeeze of the moving averages. You see that the 50 and the 21, they're all rising, and they're coming up to the hourly 200. You do have a nice little compression here on a neutral bull case. So if energy wants to have a nice little pop up, we definitely want to try to find some leadership names within the XLE. And honestly, I was looking at some charts. I probably need to do a little bit more digging, but I didn't really see it within ZOM. ZOM looks kind of gross. We can look at crude oil itself. Excuse me, CL on TOS. Crude oil is popping off here, 78. Getting back above the daily 200. The hourly is in max bull. Crude oil looks fantastic if you want to play crude oil. It's just a matter of trying to find some energy names that look pretty good. PSX, no, you're in max bear. COP, not really, not my forte. It's just kind of messy as well. Yeah, I don't know. I'll have to keep digging to see if y'all see any energy names that look worth a hoot, then let me know, because I'd be happy to take a look at them, because all the ones that I've been looking at don't look too great. So XLE, yeah, interesting. 1 hour squeeze, interesting. Let's go over to let's see, we already talked about financials. Financials are probably going to be, if you want to day trade financials, that's good. There's a lot of interesting names to kind of day trade. Burt B had a very nice move on Friday. It broke below 446, just shy of the daily 200. But like I said, you got earnings coming up on names like Bank of America, who's still holding strong. Visa looks like it's taken a spill for the worst. Yeah, Citigroup. Yeah, Citigroup is actually a pretty strong chart. You're right here at the daily 21. You're in a low compression squeeze. Strong bull, max bull on the daily, neutral on the hourly. For me, I don't play earnings, not too much anymore. I used to probably a few years ago. I was doing butterflies and wacky stuff during earnings, but I've kind of moved away from doing that. It was too messy for me. But as it sits, structurally speaking, you're in a good spot. You're holding the daily 21. It's max bull. There's not much to complain about. You have a fresh squeeze that's trying to break out. So if you have a good day, as long as you hold the daily 21, this is a good little buy. As far as the hourly goes, since you're in a neutral position, I would want to see a move back above the hourly 21, which sits at about 72 and some change. So and especially got a gap to fill up towards 73. So if you can get back above Friday's high, yeah, I think you're in a good spot to maybe day trade this or short term swing this back to 74.30. Seems reasonable. Just need to see a little bit of reversal here. We need a little bit of reversal. Want to see the squeeze go from those red bars to yellow bars and yellow bars to light blue. Want to see that momentum shift. You can also use MACD. You want to see a change there on the MACD as well. So that would be on an hourly. If you want, you can shift it to a 30-minute and try to do it that way. But as it sits, yeah, I think Citigroup is looking pretty good going into earnings. So yeah, very interesting. Just be mindful that the XLF in general is looking very yucky, very yucky. So how is Citigroup going to move higher if the overall sector and the overall market is pushing against you? Doesn't mean that it can't. It just makes it that much harder to pan out. So yeah, I would look for some changes here on some of these shorter time frames. 30-minute time frame. I like the 30-minute if you want to do the 30. See if that'll get back into gear. Let me look at the 30 and we'll take a little peek here. Yeah, got to get above 73.40. Oh, your long stock, long shares, long term. Yeah. Now, when it comes to earnings, it's anybody's ball game. So you throw out technical analysis out the window and wave at it. So that's the bad part about earnings. It's anybody's ball game. So however you see fit as far as the earnings report goes, especially fundamental, that's where fundamental analysis comes into play. I'm not a fundamental analysis guy. Chris is your guy on that. I'm sure Zach probably does more fundamental analysis than I do. Yeah, fundamentals, I play the technical aspects of the market. I don't do fundamentals a whole lot. There's some things that I trade that I have no idea what on earth they do, but most of the time I do, but not some of them. But yeah, but it looks good. So the way I look when I approach my long-term stuff, has anything changed drastically for my thesis to change? So if I have 5 reasons to get into a trade and then one of those reasons change, it's time to evaluate whether you still want to be in that long-term trade, right? Let's see where okay. Industrials. Same thing here on industrials. Mid bear score. Industrials, you're going to have a bigger impact here on the Dow. If you break 130, you're coming down to the daily 200, which sits at about 129.50, which isn't too far. It's almost like our back is somewhat up against the wall, but it can come down a little bit further. And if we hold the 200, sure. If it wants to shift gears from there and you got some long-term buyers coming into play, yeah, you could get something going there. Let's see, XLK. Look what has happened to the XLK. Your biggest holders here are Apple. Apple is a little bit worrisome here because we had this breakout into new all-time highs back in November. We hit a high of 260. In fact, during this time, Apple was pretty much leading the way. Now we've pulled back and we're desperately trying to hold this prior breakout level. If this is a fake out, then this thing's going to come back down to at least 220, in my opinion. So 220 could be very well on watch here for Apple. Your other big player here on the XLK is Microsoft. Microsoft is more of an annoyance within the XLK, if you ask me. Neutral on the weekly, neutral on the daily, neutral on the hourly here. Been bear on the hourly, it's set to daily. But as you can see, it's not a pretty chart. This is kind of messy, if you ask me. In fact, if we zoom in a little bit more here on the weekly, we can see that we are in a weekly squeeze. So that is something that I want to pay attention to. And yeah, we're kind of getting some weak signals here. MACD is crossed to the negative side on the daily. Hourly, low compression squeeze here, right out the hourly 50 and hourly 21. Can it go lower? Yeah. You could have some demand down here at about the 410, 405 zone. You got a lot of wicks down here that could act as support. So we could see a move lower here until it hits something. Is Microsoft doing a bull flag on the hourly? Let me see. Let me maximize. Let me go. I guess you're looking way out. Let's go to 360. No, this does not look like a bull flag to me, even with me zooming out. Sure, you're coming from an uptrend, but at some point, when does a bull flag stop becoming a bull flag and it just stays sideways for forever? It seems like it's been in consolidation for longer than I like, in my opinion. So to me, if we, I'll go to a 4 hour, maybe even better. Let's go to a 180. Yeah, even to me on the 4 hours, it's just, this is too sideways. That doesn't look like a bull flag to me, because I would rather see, something like this, where it's kind of consolidating, then it goes out. Here it's just, this is too much consolidation. And then I would like to see that on the larger time frames. So like if let me go to, can I, oops, no, restore. Now at some point that would, translate over to these longer time frames. So if I look here at the hourly, yeah, I mean, if the weekly wants to be a bear flag, this looks more reasonable, but it's got to break out. It's not a bull flag until it confirms out of it. So for all we know, this is just consolidation until it's not consolidation. But if this was a bull flag on the weekly, I would love to see stronger data out of these smaller time frames, such as the daily and the hourly. And to be honest with you, sure, it was strong back here, when we were hitting 456, but we've kind of crashed and burned since then. And in fact, we've come back. We held the hourly here, we broke it, couldn't come back up to it, rejected, came back up to it finally, rejected hard, and now we're back up to it. Step one, get above the hourly 200 at 435. That would be a big win for the market bulls, for the Microsoft bulls, in my opinion. Clove, CLOV. Clover Health. Insurance name. Strong bull on the weekly. Penny stock name. Not something I generally touch, but doesn't mean we can't do technical analysis on it. Nice daily squeeze you got there. Nice daily squeeze on a neutral spot. So that's good. How can this get more brownie points? If the 21 was above the 50, that would be good. The 200 is curling up. Hourly, yes, that looks like a bull flag to me. That one looks like a bull flag. That's what we want to see. Hourly compression. So, yeah, he got a nice little penny stock count. Let's see if we can get continuation above 376. 376, your target's going to be the gap resistance at 398. Gap fill will take you to 435 and then 471. Those would be my levels. If the bull flag fails, if you come back and lose $3.10, yeah, I'd probably be looking to short this thing and play the reversal. But as it sits, this is looking pretty good. Holding 10,000 shares from 98. Good God. Attaboy. Good job, Wall Street. That's what I'm talking about. $3.76 takes you to 398, 398 to 435. Yeah, you've banged yourself a winner for sure from 98 cents. That's a hell of an average on this. So you got in way back here. Oh, that's your average. So your average is way down here. That's a good average. Just keep raising your stops. Don't let the bastards get you. The only thing that worries, like my main gripe with penny stocks, you never know when they're going to come out and be like, we're going to do a reverse split or do an offering. And as soon as they do that, they kill these beautiful setups. That's my only complaint about. They always do it. So especially this is a penny stock in healthcare, I guess. So you're kind of in that realm of possibility of them doing some kind of offering. That's my only nerve-wracking thing about penny stock. That's why I kind of got away from penny stocks. It's just, it gets too crazy for my blood, but more power to you. Yeah, below 310, I would be on the lookout. But yeah, great stuff. Yeah, great average. I love this possibility on the hourly. Daily setup looks pretty juicy. Nice little uptrend, pull back, and you got a new squeeze. New squeeze, yeah. Ooh, I even have a level up at $7. So at some point I looked at this. God knows how long ago it was, but $7 is an old level of mine to kind of be paying attention to. I like it. Good stuff. I like that a lot. How much do I pay attention to the VIX daily? VIX is always on my mind, especially when it comes to day trading or when I'm, trading futures. VIX is something that is always on my screen. It should be on your screen as well, especially if you are day trading. Just know where it's at, if it's making higher highs or lower lows. The VIX here, yeah, it's interesting. Mid bull, we keep having these random, I wouldn't say we keep having these random spikes. We haven't had one in a few weeks, but last spike we had was up to 28, and I think that was December 18th. Okay. Then we came down, we crashed hard. Now we're just kind of setting back up. 20 is my next level. Above 20, you're going to 22. 22, you're going to 25. That's just how my levels are. If we get back down below 18, that would be a good thing for market bulls, bad thing for market bears. 18 would kind of set us back up for a nice little short squeeze as far as the broader market goes. So that's how I would view that. And then, of course, if we get back below 16, it's pretty much game on for market bulls. Back below 16 on the daily 200. Yeah, giddy up. Ride 'em cowboy market bulls. But as long as it stays above here, I kind of give the benefit of the doubt for higher volatility, which unfortunately makes options pricing more expensive. Yeah. more volatility, we get more aggressive moves both to the upside and the downside. But yeah, as far as the VIX goes, if you're day trading, it should be somewhere on your screen or screens. Yeah, 20, 22. You got an hourly squeeze here. If that fires, then sure, we're going further up. Baby, I like it. Boeing. Boeing, you either hate it or you love it. All right, Boeing, neutral on the weekly, neutral on the hourly. Oh boy. All right, you had a big move here up to 180. Now you're consolidating right at the key moving averages. Okay, let's zoom in a little bit. Okay. So you're at dynamic support. We can also do some fibs here. We haven't done those tonight. Grab the low, bottom. I don't know why this doesn't. Oh, that's save. There we go. All right. If we lose the daily 200, every time we've kind of come down to it, we've held. So that's what, 6 touches. If you happen to lose the daily 200, first target's going to be 165 at that 382, and then the 50% at 160. We'll call it 160, which also puts you back down to the daily 50 there. So that would make sense. Lose the daily 200, come to the daily 50. 382 first, though, at 165. If we break above, what is that, 175? I like it better above 175 to retake on the highs. We are in a low compression squeeze on the daily, so that's a positive, especially with this neutral bull. Hourly's in a more neutral spot, so I would want to see, let's see. Yeah, there's that 175 area. Get above that. You're good. We can also go a little bit further. Go to the 30-minute. Oh, yeah. 30-minute 200 also sits there around that 175. 175. Good for longs. Below 169. Good for shorts. Like I said, Boeing, either love it or you hate it. Little compression there, too, on the hourly. So we'll see if that holds. It looks like the hourly 200 is also trying to hold steady as well. It's one of your favorites to trade? Ooh-wee. You a different breed, my friend. All right. Let's continue on. Let's see. We looked at Apple and Microsoft. Let's look. We kind of talked about semiconductors. NVIDIA. Look, NVIDIA should be kind of clear cut. We had this nice move to the upside, 152 and 90. Booty traded it. I traded it. I think half the Discord traded it. Wonderful move. We called it. Great. Got in, got out. No messing about. And then after the CES event, things just kind of came crashing on through. It's a shame. It looked like this squeeze was finally going to pop. And we started to get those light blue bars, and then yikes, dark blue bar. Here we go. Need to see some sort of reversal. If NVIDIA loses 133, I like the idea of shorting it back down to about 128. I don't like longing it until we get back above 153. 153 takes us back to 160 and 167. That's just how I'm going to play it. And like I said, we need to see something take the reins and become the leadership, because semiconductors are having a really tough time. LMU, yeah, they had some good news there. This is just kind of a sloppy chart. I don't really like sloppy. It doesn't mean you can't trade it. It just makes it a little bit more complicated. Maybe day trading. Let's see, that's an old level. Let's see. There's your gap. Oh, that's because I'm on that. You could day trade this. If you get above Friday's high, take it back up to that. That's like the strat kind of stuff there. Above 178, take you back up to 103.50. That could actually be a pretty good play, especially if semiconductors have a good day tomorrow. Get a good bounce. If the ES can wake itself up here, which right now it still hasn't. Let's see. Tesla. We haven't looked at Tesla. Tesla holding steady, neutral bull, but mid bear on the hourly. Kind of the same situation. We need to see some of these reversals on the smaller time frames in order for us to get more bullish. If we lose 373, you got a little bit of support down here at about the 360 mark. So that would be about a 13-point move to the downside, and would also give you a retest of the daily 50. Daily squeeze in play. You got some weak thrust to the downside. So if we saw a green arrow reversal here, that would be good as well. But right now, I will give some credit to the market bears for now, but it's not the strongest bearish setup that I've seen out there. If I wanted to talk about some crazy bearish setups, if the market continues to move to the downside, UPS is on my list. If we lose 122, yeah, this thing can come down lower to about 116. Let's see if we look at, we talked about PDD. That one's on my list if we possibly short. Team, I think this was somewhere in the main chat. Who posted that one? J Tito. What's up, Leia? J Tito. Team looks like a good short below 240. Another one, PLD, Logistics, yucky. I am leaning short side unless the unless the Bulls can regain control of some of these of some of these smaller time frames. That's kind of what we've been talking about. We're at an interesting inflection point, if you ask me. We're back at a lot of these weekly 21 moving averages. Right. That needs to fill. Yep. But until we get some sort of life out of the market bulls, I can't give the benefit of the doubt. We could get a decent pop, a short squeeze, but the market bulls have to prove themselves, and until that happens, right now, even with right now on futures, I mean the market is still moving down. We hit a new low not too long ago, so yeah, and I even shorted the futures like before I hopped on live, so right. And who knows, maybe we fill this gap in and market bulls finally step in. We're at that weekly 21 and we can giddy up. But I'm going to be paying attention to that 30-minute chart to give me some sort of direction. Yeah. So if they can wake up, one of my favorite bullish setups is Google. Meta is also in that plate. Google is holding on to the prior lifetime highs. You know what I mean? Yeah, Nvidia. Yeah, I just finished talking about Nvidia. If it gets back above 153, I like it. You're good. We'll keep talking. 133. If it starts to lose 133, 134 in that 4 hour.
Yeah, I got that.
It's kind of yucky.
You see that head and shoulders on the 4 hour? So right. No, go right. Go to the left. I mean right. Right
That
there.
one. Okay. It's
Right
very
there.
granular.
and then the big pop that we had.
So you're thinking about something like that.
Yeah,
Okay.
because also on what do I have? On the weekly, we cracked a wedge. Was it weekly? Yeah, on the weekly, we cracked the wedge, and we rejected on that wedge too after that pop that we had that pop.
That little moment of hope
Yeah,
for
but
the
we'll see.
Bulls.
We'll see how it plays out. Like right now, I want to play, the longs for Nvidia at least
Okay.
to
Playing
play
off
that.
support.
Yeah, I have an order block on the 4 hour that we bounced on the previous red candle.
Okay.
We on Friday at 7 in the morning.
Okay.
So we'll see how probably tomorrow we could see some a little bit more down. You know, if we do open down there, then I want to see like a reversal type of thing.
We'll
So
see. We'll see. I'll be rooting for you. It's like no touchy for me just yet, but or for now at least. Keep in mind we also got inflationary data Tuesday and Wednesday. But if you're looking, but that's Tuesday and Wednesday. If you're talking about tomorrow, then yeah, we could maybe see something. It would be nice. Let's see. We were on Google. Yeah, Google, like I said, is right here at prior all-time high breakout. It's just been kind of back and forth, back and forth. Still holding, and what's more impressive is that it does have a max bull score on the weekly, daily, and we have a mid bull on the hourly. So if the market does have a nice little bounce, this is probably going to be one of my go-tos. Google looks very solid. It's holding up compared to a lot of the names out there. Meta, I've already taken debit spreads on this one. Continues to hold the daily 21. It's got a max bull on the weekly, mid bull on the daily. A little bit of a neutral spot. If the market does get a nice little turnaround, yeah, why not take this to retake on the all-time highs at 638 and beyond? We are in a low compression squeeze on the daily, and things are shaping up. So my two, strong candidate names are Google, Meta. Heck, I'm even throwing Roblox out here. Even during the sea of red that we've had across the board, a name such as Roblox is holding up very well. We got this really nice daily squeeze here. The 4 hour squeeze is firing to the upside, and that one seems promising as well. So I'm going to be keeping an eye on those guys. And like I said, if there's any further weakness, there's plenty of names to pick from UPS, AMD, Visa, even. You got names like General Motors for those that have smaller accounts and want something more affordable as far as options pricing goes. GM definitely fits that bucket. We are breaking below the 50 mark, and the daily 200 at about the 48 level seems fitting at this moment in time. So that looks pretty good. Pepsi has been leading the XLP to the downside, and I'm going to be looking at Coke if Coke wants to give us some nice little downside. And again, if you have a smaller account, name like Coke has some pretty affordable options as well. Just understand that a name like Coke moves slowly compared to something like some of the big boys like Meta, Nvidia, and all that kind of good stuff. So it's just a lower beta name here. It even the options pricing does move lower than Pepsi. So what I like to do on names like Coke is grab something further in the money that has at least 70 delta and play it that way. So 70 delta on some of these slower moving names plays out a lot better than what you think, because you get 70 cents on the dollar per move. So something like the something like the 57, no, excuse me, not the 57. So if this wants to come down, something like the, yeah, something like the 62, 63, 62 and a half put, something around there, seems reasonable. You get more bang for your buck on those higher delta options that will pay better on, say, if this moves from $60.60 down to, I don't know, let's see, where are we going? Let's say we go 60, we'll go down to 60. That's a 60-cent move on the underlying. And if you have like a 70 or 80 cent delta, that's a pretty good return on that option contract. Something to consider. Tonneson, Nvidia. For me, again, 153 to the upside, 133 to the downside. What was it, Andres? It just hopped on. Came in and he's looking at a bounce here at about that 133 mark. So if that's the case, yeah, you do have some support right here that you can play off of. But if we start to lose 133, then I would be looking to take it to the daily 200. You do have this daily compression that I'm paying attention to, and we'll see which way she falls. Let's see. That's about the third time we talked about Nvidia. Let's go to gold. If any of y'all are involved in gold, yeah, kind of bullish if you ask me. GC is probably the better look. Yeah, GC's futures. GC looks really good. Needs to get above 2758 for us to have a move back up to the all-time high at 2,800. Gold can be a little bit of a messy trade, kind of frustrating. You definitely want to get something longer dated. And then let's see, Bitcoin. If Bitcoin continues to struggle, if we start to lose this daily 50 at 90, what's my note? 91,300 is my level for Bitcoin. 91,300, that's about the daily 50. Then I'm going to be looking to short coin. You did have a decent candle close there on Friday, but if we start to lose 246 on coin, I'm going to take it down to about that 230 mark. So we'll see if that comes to fruition or not. But all right, let's go ahead and recap everything since we're running about an hour now. I like to try to keep this at about an hour. Everybody's, brain rot from TikTok. They want that short-term data, that short-term stuff. Okay, so SPY, pretty yucky. Gap fill would be 576.74. Everything's in the bear's court. We need to see a shift in these smaller time frames, such as 30-minute or 1 hour. Break above 602 would definitely benefit the bulls. We could argue get above about 594 to take us back up to 600. But like I said, it's the bears market to lose at this point, and we need to see evidence of that to change. We got inflation data on Tuesday with PPI, followed by CPI on Wednesday, where we are expecting CPI to come in a little bit heavier than the prior reading. We're at these weekly 21s, especially on the SPY and the QQQs. We've seen a lot of damage out there as far as the small caps, the IWM right here at the daily 200 and the Dow just shy. If we take a score, then there's more bearish signals out there than bullish signals. We even looked at the SPX A50R, which SPX A5RR, which tells us there's only 16, right around 17% of stocks within the S&Ps trading above their 50 simple moving average. If we change that to the 200, then only 49% names within the S&P 500 are trading above their 200 simple moving average. We have 1, 2, 3, 4, 5, 6, 7 out of the 11 sectors are in bearish positioning, and the other 4 are in neutral positioning. Dollar needs to cool down, needs to move back below really 108. That would be nice. VIX, we want to see a move back below 18, and especially back below 16. That would calm the nerves a little bit. Yeah. Careful. Defense. Play defense. And we'll see where the market takes us for the week ahead. All right, guys, that's going to be it for me. I appreciate y'all coming in, hanging out with me tonight. There's a lot of things you could be doing tonight, but you came in and
Later,
hung out
Trust.
with me. Hey, man, I appreciate you. Good idea on NVIDIA. We'll keep an eye on that. And yeah, I appreciate y'all. This is recorded, so it will be up.